Hey everyone, welcome back to another video. This is episode 5 or volume 5 of the Optimal Trade Entry series. We are looking at the S&P 500 or ES if you trade index futures. This is the 15-minute chart, and if you are in the Telegram group, you would know that I have been outlining this daily PD array. We are looking at that daily bullish breaker and expecting a reaction from that daily bullish breaker. Now, last week was a little tricky to navigate through, but we were able to get through it. Consolidating week, and we got a retracement into that bullish PD array, daily bullish PD array, late into the week. I believe it was Thursday. Yeah, it was Thursday. But I'll show you guys what I was looking for and how you can find these setups framed on the daily time frame. So this is why the daily bias is key. And even with a daily bias, even if you're wrong on your trade idea, you will more than likely always get a strong reaction. Now, I don't mean always, but more often than not, you will usually get a strong reaction from these daily PD arrays. They're very strong, they're very high probability, and you have plenty of opportunity to find some nice points or pips if you trade forex. So I'll go ahead and turn my annotations on, and I'll show you guys what I mean. Annotations are now on, and as we can see, price aggressively trades into this daily bullish breaker. This is that red line here, and after I explain this, I'll zoom out and I'll show you guys the daily time frame. That way you guys know what I'm talking about. As we trade into here, we start consolidating price. We get a little swing high. We trade back into this M15 bullish order block. Then this is what we are looking for, the strong impulse move higher. As soon as we broke above this swing high, this is our shift in market structure. This strong impulse move higher indicates smart money participation. This means that we are now in the buy model, and we are getting institutional sponsorship from our daily bullish breakers. So this is our daily PD array, and we are expecting price to come into this and reverse. And this strong impulse move higher is a smart money footprint, indicating institutional sponsorship for the bullish order flow. So this strong impulse move higher, we form a swing high, and then we trade back into this fair value gap here, from this candle's high to this candle's low. If you extend this out here, forms our fair value gap, coupled with what's our entry pattern, bullish order block. This is always our entry pattern. So if you've been watching the series, bullish order block coupled with a fair value gap. This is the 15-minute chart, and as we can see, we trade into it. This is optimal trade entry, and price starts to trade higher from here. So for this series, we have been focusing on the 8:30 a.m. to 11 a.m. New York optimal trade entry time window. Now that's exclusive. That's not exclusive to forex, but this setup here is exclusive to indices or index futures, because you would not be looking for PM session setups for forex or the currency market. This setup here would be exclusive for the index futures or indices. If you trade the CFDs, we typically get a AM session setup and a PM session setup. Now, we don't always get both, but there will be some days where we get both setups. And as we can see, the PM session setup for this, in this case, for Thursday's November 17 trading, was a reversal for S&P 500. We were trending down into the London session and the New York session. Then we consolidated here, equities open, 9:30 a.m. Move higher. Then we retrace into this 15-minute bullish order block. We come back down into this daily bullish breaker once more. Then we get a strong impulse move higher. This displacement is what we are looking for. Smart money footprint here. Displacement, strong move higher. Price is in a hurry to go higher. This is what we are looking for. So as soon as we get this move, we retrace into, what is this? The PM session. So for PM session, for my model, that I teach you guys, and you guys see me trade every single week. I focus on 1 p.m. to 3:30 p.m. That's where I will typically look for my optimal trade entry setup formation. So I'll go ahead and anchor my fib here from this swing low here, because this is our swing low before this impulse move higher. This is why I use a swing low to anchor the fib. So from that swing low up to this swing high here, extend that out in time. When we trace into this fair value gap coupled with an M15 bullish order block, these last two down close candles before the move up, we retrace into the 70.5% retracement. But look at the candle bodies respecting the 62% retracement. That's perfect algorithmic delivery. We get a strong move higher, take out the buy side. Now you can be done here if you're an intraday trader. You can be out here at above the swing high, maybe hold a partial, trail your stop loss to break even, or maybe slight profit. But as we can see, we consolidate into the daily close and into Asia. True day open, New York midnight, where we get a slight retracement lower into this fair value gap, M15 fair value gap, another one. We can see price is respecting those bullish PD arrays. This is how you find your setups. This is how we are able to work within those PD arrays. We want to see price respecting our bullish PD arrays. This is in case of we have a bullish bias in mind. So for this example, we are expecting a run on the buy side liquidity here. This is our previous session's high, and as soon as we retrace into that, we get a slight move higher, retrace once more, take out the sell side once more, and then we get a strong impulse move higher, slight retracement, and then price is in a hurry to get to that buy side liquidity. Then we kind of taper off a little bit, but as we can see, when I zoom out, you'll see what I mean. But look, this level here, this is what is our framework. Without this level, this means nothing. This is how we frame high probability setups. This is why daily bias is so important. So we'll zoom out to the daily time frame. This is Thursday's trading. We dig down into, not deep, but into this candle's body. This is our daily bullish breaker. So for those of you that don't know what a bullish breaker is, I'll quickly go over it. But you can study this example, and there are many breaker examples, and they form many times a week, and it's a very strong entry pattern. So for our daily bullish breaker, we are looking for these key reference points. So we would first be looking for a swing low formation here. So this is our first swing low. Then we would be looking for a swing high. So price trades higher, swing high formation. Then we would be looking for an impulse move lower to take out the swing low, the initial swing low. As we can see, price trades down, we form a lower low. And here, after we form this lower low, we are looking for a move higher to take out the initial swing high. So here, we get a slight retracement, but this is what we're looking for here. As soon as we trade above this swing high aggressively, and as we can see here, this is now giving us our confirmation for a daily bullish breaker. And what is the daily bullish breaker in this example? This is that last up close candle before this move down here. So as soon as we trade higher above the bullish this bullish candle here, this now becomes a bullish breaker. So we dug into that bullish breaker. Look at this red line here. This is where we got our reaction. This is very significant, very relevant point in price action. Strong reaction from that level. So we'll go ahead and zoom out again. We'll go over that once more. This is our daily bullish breaker. This is our red line here. We trade aggressively into it, consolidate, move higher, retrace into this M15, and then this is our confirmation here. Strong impulse move higher with a shift in market structure as soon as we break above this initial high here. We retrace into what is this optimal trade entry, New York PM session, very powerful setup. Fair value gap coupled with these last two down closed candles. This is our bullish order block, 15-minute bullish order block. 70.5% retracement. Our candle bodies are respecting the 62% retracement. Strong reaction higher. You can be out here above the swing high, trail your stop loss, slight profit, or break even. You were able to hold. If you were able to hold into the next day, price takes out the buy side liquidity, and then we kind of taper off a little bit here. But this is how we can use our daily bias to find high probability setups, and we use our same model, the New York optimal trade entry, with our same entry patterns, bullish order block coupled with fair value gap, or we can also use our bullish breaker coupled with a fair value gap and a bullish order block. So these are our entry patterns. If you've been watching the series, we always use this entry pattern here. High probability. Study this example. We went over it in real time. And don't forget to like and subscribe, and I'll see you guys in the next one. Thank you.